BlackRock is forecasting that global assets in active ETFs will go from about 900 billion to 4 trillion by 2030. So obviously that's a growth area, and then you see a lot of these big fund houses moving towards this trend in the US.
Hello, you're watching Proactive. Joining me is Han ETF Head of Research, Tom Bailey. Tom, very good to speak to you today. We're talking about active ETFs, and there's been a growing issuance of active ETFs by Han ETF as well as other ETF issuers. But aren't ETFs supposed to track an index? What's an active ETF?
Sure. So, I mean, if you think of, say, the history of ETFs, right? So ETFs start in the early 1990s. The first ETF was obviously tracking the S&P 500. It's still in existence today. It's the biggest ETF. So kind of over that period since the creation of ETFs, they've very much been a vehicle for tracking indices, right? So they kind of become in many ways synonymous with this passive approach to investing. It kind of happened around the same time the adoption of ETFs coincided with a shift among many investors towards passive strategies. So they kind of had this kind of association together, and they are obviously the primary way an investor will gain exposure to an index. But I think the important thing to keep in mind, and what this kind of recent developments show, is that an ETF is actually it's a fund wrapper, exchange traded fund. It's a fund type, it's a structure, and so you can really put within reason anything within that fund structure. So what we're seeing now is more and more asset managers are opting for the ETF wrapper to package up their investment strategies, whether that is obviously passive and then increasingly now active. So I think what we're trying to kind of get across to people often is not to confuse the fund structure and investment strategy. That obviously you have a fund structure, and that can be the mutual fund structure, it can be the ETF structure. You can put in that a passive strategy, or you can put in that an active strategy, and to kind of separate those two.
Why would an investor prefer an active ETF over a mutual fund or other fund structure, Tom?
Sure. So there's various kind of benefits to an ETF. I think one of the biggest over the mutual fund structure is the fact that it trades throughout the day. You have that kind of daily pricing, not daily pricing, rather kind of minute to minute pricing, rather than with a mutual fund. Obviously, it gets priced at the end of the day. If you go and if you want to buy a mutual fund in the morning, you get the price at the end of the day, for example. Whereas with an ETF, you see that price on your screen, you buy it there and then. I think it fits in much more with the kind of shift towards kind of on demand, instant, digital. Investors kind of often seem a bit confused. Why does a mutual fund work that way when you're on a digital platform on your phone buying a fund? Surely the price you see is the price you should get when you click that buy button. So that's one of the key benefits. In the US, there's one of the attractions has been the tax advantage that ETFs have versus mutual funds in the United States. That doesn't exist in the same way in Europe. It does exist in when it comes to some income funds, particularly those holding US stocks. But that's been a driver in the US, and then you're seeing obviously the replication here within Europe. And then the other aspect is the transparency of them. So if you want to see what your mutual fund is holding, you can't see every day what all those stocks are. You can only see the top 10. Whereas with an ETF in Europe, at least, they have to disclose their full holdings daily. So you want to go on, see what exactly the ETF is holding. You'll go onto the website of the ETF issuer, and you can see a whole list of every stock, even the tiniest holding in there. So I think that transparency is also an attraction many investors have.
Tom, how much have active ETFs grown?
Sure. I mean, so there's various ways to look at this. So during the first half of this year, over a third of all money flowing into ETFs globally went into active ETFs. Last year, about half of all new ETFs were active within the US. And then you have kind of these different forecasts. So BlackRock is forecasting that global assets in active ETFs will go from about 900 billion to 4 trillion by 2030. So obviously that's a growth area. And then you see a lot of these big fund houses moving towards this trend in the US. So famously in the US, you saw Fidelity convert a lot of their existing funds into ETFs, T. Rowe Price, these kind of big names. And we were just starting to see the same within Europe. And so on the Han ETF platform, we have 4 active ETFs right now, but we expect several more by the end of the year. We've obviously, as your listeners might know, we always work with a third party. So we've got some big names who we're going to be launching active ETFs with this year.
Could you name a couple of your current active ETFs, please, Tom?
Yeah, sure. I mean, the first one we have stretched all the way back to 2021, and that's our MAO ETF. It's a global equity strategy, but screened for Sharia compliance. So obviously a very particular subset of investors. Although it's a good managed strategy overall, so it's not necessarily to say that only those concerned about Sharia compliance would be interested. And then this year, so we partnered with Guinness Global Investors to create a renewable energy ETF, ticker CLMA. And so this is obviously an actively managed strategy looking at the renewable energy space. And then last week we launched our Harbour Healthcare UCITS ETF, its ticker being WELL, which again is a thematic active, so it's active but fishing only in that healthcare space. And then we'll have some more fixed income products as well launching this year, which are active.
We'll keep our eye out for those when you launch them. Tom, thank you very much for speaking with us today.
Thank you.
That's Tom Bailey, the head of research at Han ETF.